Hey guys, Posh English Trader here, Chris N, and today I want to bring you the best Forex trading support and resistance strategy, and I want to take you through how to determine which moving averages to use and when to use them. Now, with so many experts out there on websites and blogs shouting about their particular method, it's confusing to know which one you should actually be using. Well, today I want to take you through some steps that hopefully going to clear that up for you. All right, let's get started. Okay guys, so first up is to decide what we're going to use our moving averages for. Now, this might seem like a blindingly obvious point, but actually there's a lot of different uses for them. So in this instance, we know that we want to use them as support and resistance levels in a trending market, and that's going to give us a really good starting point to look at our charts. Next step is to start with a higher time frame. So I always like to start with the weekly to get a sense of the overall trend and then bring it down to the daily. But no matter which time frame you want to end up with, I always recommend starting higher and then bringing it down. Okay, the third step is to switch over to a line chart. Now this little tidbit is going to make it 1,000 times easier for you to see clearly what the trend is on the chart. So I'm just going to do that on this New Zealand dollar Canadian dollar pair just now. So here on IG, I switched over to a line chart just here, and now we can clearly see that actually the pair is in a downtrend. Now that brings us on to step number 4, which is to identify the trend. So we can see here on the New Zealand dollar Canadian dollar that it is in a downtrend because of these lower highs and these lower lows. So we know that we're going to want to try and trade the pair down. Okay, so next step is to move over to your preferred time frame. Now for me that's the daily, and I changed that over just here on IG. Okay, there we go. So once you've got down to your preferred time frame, you're going to want to now try and determine which way the trend is moving on that particular time frame. Now to do this, I simply add my moving averages. So I use the exponential moving averages personally because they use a more recent price average, which means they react more to what the market is doing or react quicker to what the market is doing. It's just personal preference, and I believe if you use the simple moving averages, it's not going to make a huge amount of difference for this particular strategy. Okay, so I've added the EMA here, exponential moving average. I haven't got any averages selected at the moment, so I'm going to go ahead and click on the EMA icon just here, and to determine which way the trend is in, I am going to select the 20 and the 50-day moving average. Now what I recommend here guys is that you use quite vivid different colors because they can get quite confusing otherwise. So I use red and blue just here as an example, and on IG you can actually change the color, and I think you can do that on most of the other platforms as well. Okay, so go ahead and click on apply. So we can see here that if the 50-day, which is the red line just here, is above the 20-day, the blue line, then the pair is in a downtrend. If it's reversed, so if the 50-day is below the 20-day, then we have an uptrend. So we can clearly see that through our most recent price action here, we can see that we have just started in a downtrend. So next step guys, you're going to want to go and zoom in onto the area that you're looking at trading. So for us, that is this beginning of this downtrend just here. So let me just zoom in. Okay, perfect. I'm just going to move this across to the middle of my screen so you can see a little bit more clearly. Okay, there we go. So we can see that actually the moving averages are dividing as well, the 50 and the 20. And this is a good sign because it means the downtrend is getting stronger. Okay, so next step is you want to try and find where price is bouncing in between two moving averages in your downtrend. So for this step, you're going to want to switch back over to your candlestick chart. Let me go ahead and just do that now. All right, so actually on this daily time frame, you can see that the lower highs are bouncing in between the 20 and the 50-day moving average already. So you could potentially trade this if you wanted to and wait for price to bounce back in between the two and then look to trade it from there. However, what I've found here is that because of these candlesticks here, these two large bearish candlesticks, if I have a day job, for example, and I'm away from my trading desk for a long period of time, I'm likely to miss these movements here because it's all in one candle. And I don't want to do that. I want to try and catch the movements as early as possible to profit from most of the downward movement. So what I'm going to do is I am going to go ahead and move down to a slightly lower time frame to see if we can get a wider spanned trade. So I'm going to go ahead and move my time frame now down to the 4 hourly, as you can see just here. Okay, perfect. So what we can see here is that the 50 and the 20-day moving average, if I just zoom out a little bit here, Lovely. So these are our peaks that we're trying to trade here, the two lower highs that we saw on the daily chart. So we can see that the 50 and the 20-day moving average aren't giving us our places to trade at the moment. They're too small. So what I'm going to do is I'm going to go ahead and add the 200-day moving average to my chart now. And this is all part of the process, guys. You need to gradually go down, gradually see what the trend is, and then gradually add the moving averages that are going to give you the best indication as an indicator of which way and when to trade. Okay, so here we go. Let's add the 200-day moving average. I'm going to pick a nice gold color for this one. Apply that one so we can see. Okay, great. So, and also what you want to do, sorry, just here as well, is just lose the 20-day because we're not going to need it anymore. So I'll just untick it. There, okay. Yeah. Okay, so now we can clearly see that the price is bouncing in between the 50 and the 200-day moving average. So this is a really good indication of the moving averages that we should be using for this particular downtrend on this particular time frame. Okay, so if we zoom out here slightly more, okay, so what we're going to look for is we're going to look for price now to bounce back into this area in between the 50 and the 200-day moving average from where it is at the moment. That will give us a signal that we can get in on this downtrend. However, what I would say here, guys, is that you need to make sure that you're not only using one point of reference for your trading, and that doesn't matter which indicator you're using or which technical analysis strategy you're using. You need to make sure that you're using at least 2 points of reference to get in on the trade. So I've found personally that using horizontal support and resistance lines goes really well with moving average support and resistance. So what I'm going to do is I'm going to go ahead now and try and figure out where the support and resistance lines are on this chart. Okay, so what we can do, and what I recommend you do as well, is zoom out first of all, because that will give you a much clearer picture of where the support and resistance levels are. Okay, so always start with the nearest one because that's the easiest. So let's go ahead and select the horizontal here. All right, lovely. So the first one, the nearest one, is these 2 points here that you can see. Okay, so I'm looking at these areas just here. So you can see its price has bounced down to it twice, and that gives us that horizontal support and resistance. And also it's bounced off of this bounce just here, which has also given us another point of reference. So 3 points of reference for this support resistance level. Okay, add a second one, which will give you a second point at which you could potentially trade, building up the strength of your overall trade. Okay, so I'm going to go ahead and add the second support and resistance area just here. Okay, so price has bounced off around about this level the most times here. Now, by the way, guys, if you want more information on how to correctly identify support and resistance levels and how to draw them, then check out my other video on this, which will be appearing in the right-hand side, top right-hand side of your screen right now. Okay, so after you've done this, guys, go ahead and zoom in back into your potential trading area. So there we go. All right, so what we're going to do is now we're going to wait for price to potentially bounce back into between the 50 and the 200-day moving averages, and also meet with one of our horizontal support and resistance levels, and that's the point at which we're going to look to place this trade. So there you have it, guys, a step-by-step strategy on how to use moving averages as a resistance area to enter a downtrend. If you wanted to use it for an uptrend, simply go ahead and use them as a support area. Now, what you need to have before you start implementing moving averages successfully is a base strategy. And that's why I've gone ahead and created this 100% free 3-step trading system ebook, which will show you how to enter high potential trades that could drastically improve your results with just 3 simple steps. And you can combine this with the moving average strategy that I've just showed you. So 100% free at poshenglishtrader.com/3 steps. So go ahead and just type that into your browser address bar, poshenglishtrader.com/3 steps, or you can simply click on the link in the video description below. Okay guys, thanks for watching this video. Hope you enjoyed it. If you did, make sure you hit the like and subscribe button below to be notified of all my future video content, and also comment in the section below to let me know how you're getting on using moving averages in your strategy. Okay guys, until next time.